Overall, on the daily chart here, we rallied last week, and the Bears, they have a wedge top. The Bears tried to get the reversal, and they did a decent job yesterday, and they got some follow through today. But the reality is, Bulls were buying, and Bears bought back shorts on the way down, testing this breakout point here, and Bulls started buying for the second leg up. So at the moment, probably going to get a second leg. So anyways, trading range, deep pullback. The market's deciding whether we're going to rally to the February high or if we're going to sell back off. Bar one, gap down and bear bar, but a doji, probably buyers below, scaling and lower. Because of the gap, odds are we're going to get at least a small second leg down. Bar two, we have reversal bar. High one buy following the gap down, but there might be buyers above, but the reality is there's probably sellers above one, and we're probably going to go sideways. Consecutive bull bars, 2 and 3, but probably sellers somewhere above, but strong enough rally, probably buyers below, scaling in lower. And then 4, outside bar. Enough of a surprise on 4 that the upside's probably limited, and we're probably going to get a second leg down, which means we're probably going to fall below 2. 5 and 6, 3 consecutive bear bars. Probably buyers below, but with 3 consecutive bear bars, we may get a small second leg down. And then 7 and 8 breaking out below the bars to the left. Strong enough breakout in a micro channel, probably going down at least a little bit lower. So probably sell the close. 9, follow through, still sell the close, and probably going lower. 12, a little bit of an exhaustion, so profit taking down here. The downside is probably limited for at least a couple of bars, but any reversal up is probably going to be minor at best. 13, inside bar. Are there buyers below or sellers below? There might be more buyers below 13, but tight bear channel, that will limit the upside. 14, bull bar, but it's the first bull bar since bar 3, so that is a sign. Obviously, strong bear breakout, and that will limit the upside. 15, 16 consecutive bull bars, but probably more minor, which means even if we go up to here, probably sideways at best for the bulls. 18, doji bar, 2 for the bears. They see it as 2 legs up. Buyers below 17. Tight enough bull channel that the downside is probably limited as well. Probably have to get to the moving average. 19 and 20 breaking out below the past 3 bars, but tight trading range, probably buyers below, scaling in lower, and probably sellers somewhere above. 21, 22, starting to form more of a tight trading range. Whenever you get a trend from the open like this, often you have to wonder if it's a sell vacuum test of support and the market's going to go sideways. 24, second leg down from 19, 20, and 21. Here's the second leg down. And then 25, we have a bull reversal bar. It's still a tight channel, so any reversal up is minor. And until you get a strong trend line break of this or this, probably best the bulls can expect is minor. 27 and 29, strong enough trend line break that it's probably going to lead to more sideways trading, but first time we've touched the moving average, probably minor reversal, which means there's probably sellers up here. But a lot of bears will, if they're selling, they'll probably scalp out. 30, a bear bar. It's an inside bar. probably buyers below 30 scaling in lower. And as far as buying up here, the risk the bulls face is you're at the moving average. Tight trading range, so pretty much breakout mode. And then we continued in breakout mode for several bars. So at this point, we have a triangle, and the bulls, they want an upside breakout of the triangle, and the bears want a downside breakout. So breakout mode, decent bull bar on 40, but a possible wedge, 23, 31, and 40. And then we got a second leg down. For the bears, they hope this is a bear breakout below the tight trading range. However, this may be more of a failed breakout and a final flag. And then 42, an inside bar, a reversal bar. Always in bears, I would get out above 42. Too much risk of a rally. 3 bull bars, and then a test of the 41 high, so a double top. Some bears, maybe they'll sell below 45, betting on a moving average gap bar. But with 3 consecutive bull bars, there's probably more buyers below 45 than sellers. $46, micro double top. I would get out of longs below 45. And then we have an upside breakout on 48, followed through 49. Probably going to test somewhere up here. And then an outside bar, still by the close, but this outside bar is disappointing, and that will limit the amount of sellers. That will limit the upside. 51, we have a reversal. We rallied and pulled back. Why are we pulling back? Because this was damaging. This bar went outside up, and that will limit the amount of buyers at new highs. Plus, you're in an area where bulls got trapped. 52, we have a bear bar. Big enough surprise, probably going to go more sideways. Still probably will get a second leg up. I'm going to speed it up just a little bit. Tight bull channel. We had buyers below, and we're starting to rally. We may have to get to the high close of 3 and yesterday's low, but even if we do, probably sellers somewhere up here. And you can see we started to go sideways for several bars. Bear breakout, test of the bottom of the trading range down here, and the market found buyers. Strong enough breakout, probably sellers above. However, it's a breakout of a tight bull channel, and the market may have to get to a new high before the sellers come in. 71, 72 consecutive bull bars. Is it by the close? Probably. Let me back up. Consecutive bull bars, it's enough disappointment that it's reasonable for bears to exit. The bears, they want a double top with 66, but at this point, you're at the open of the day. It's not quite by the close. It's probably a little early. You're at the open of the day. You're right around 2:30, so there's only 30 minutes left in the day. Probably going to go more sideways here. And you can see the market got an upside breakout. Big enough bull bar, 75, late in a move. Probably exhaustion. So I would not buy the close too late in the day. And that's what happened at the end. The market sold off. For stop entries, reasonable to buy above 1, but traders probably get out on the way down, and then traders start selling either below 6, 8, or 9. And as far as it sell to close, anywhere in here. And the next stop entry, maybe buying above 25, but aggressive. Otherwise, buying above 42, 43. I would not take any stop entries in here. Or you buy above 48 or 49. And bears probably get out below one of these bars. Bulls probably get out below 64. Bears buy again above 71. Or bulls buy again above 71, and bears get out here. For limit orders, lots of limit order trading. Traders selling above 1. The bulls that bought below bars here got trapped on 7, and that's what led to 8 going down on its low. So 8 sell to close. Bears selling above bars, bulls buying new lows, scaling in lower, and all through here, limit order trading, bulls buying below bars, bears selling above bars, And then bears got trap selling here. And pretty much the same thing up here. Sellers above bars, buyers below bars, scaling in lower. For buy the close, sell the close 8, sell the close 9, 10, 11. You can even sell the close 12. But if you do, pretty dangerous. And a lot of traders will scalp out at a new low and sell the close any of these bull bars, bulls buying the close of any of these bear bars in this tight trading range, and then buy the close 48, 49, even 50. But 50 is a warning that the market will probably go more sideways. Let me take a look. Questions real quick. I'll make the next video of these longer, but unfortunately, I have to make this video a little bit shorter. Is buying the close of 40 good? It definitely seems reasonable, but it's breaking out of a trading range. It's buying the close of 40 good. It seems reasonable, but it's breaking out of a trading range. And big bear spike this morning is this example of something that's reasonable but not good. Yeah, if you're looking at 40, 40 is a breakout of a triangle, and I mentioned that a few minutes ago. And if you're buying 40, you're buying the first close really above the moving average, really the first body entirely above the moving average. So if you're buying it, it's pretty much buying high in a trading range. And it's also a failed breakout of 18 and 31. So there's probably more sellers up here. Plus, it's 3 legs up, 1, 2, and 3. So it's not really ideal. If selling below bar 8 here, can you use a wide stop above 8, looking to get to the 525 high? So the 525 high. Yeah, I think that's reasonable, which the 525 high is pretty much, I don't have it drawn on this computer, but the 525 high is 75.50, and you can see the market came down to right to it over here. But yeah, you can sell the close at 8, put a stop up here. You probably don't need it all the way up here. A lot of traders would sell the close at 8 and maybe use a stop above 7 or a measured move up of 8. Question, I bought it above bar 22 here and got stopped out, but bought 25. So they bought the reversal up on 25 and came out at the moving average. Should I have stayed in or trust my stop? Yeah, I think the problem with buying 22 is there's probably going to be a second leg down from the 21 sell off. So a lot of traders would not necessarily buy there. And you also know trading range is probably buyers below. So for me, I think this is a mistake. Better to buy above a bar like 25. Better to probably wait and buy down here or above 25. But if I did buy 22, I would probably use a wide stop. Is it a bad idea to sell bar 24? Yeah, it's the best looking bear bar. It's kind of the opposite of buying 75. 24 is the best looking bear bar in a tight trading range. Probably buyers somewhere below. Is bar 4 through 12 a micro channel, sell climax, and a second leg trap intraday? You could technically call it that. We have a gap down, that's leg 1, pullback, leg 2, and it is consecutive sell climaxes, tight bear channel. So you know the first reversal up is probably going to fail, but reasonable to call it that. What are the best trades on the chart and why? There's lots of trades, but probably the single best trade is selling the close of 8, selling the close of 9 for a second leg down, or buying 48 and 49, but you need a wide stop. A lot of this day was a trading range day. We have a strong sell off, and then we went sideways for 2 hours and then sideways over here. But overall, I think those were the best trades. Okay, so I have to end this video a little bit sooner than I would like, but I will try and make the next one a little bit longer. All right, hope everyone enjoyed the trading day, and we will see what happens tomorrow. Have a good one.